It's like pretty good news too.
Let me check out the Forex Factory.
I looked at it a little bit earlier. It looks pretty good.
Oh yeah. Yeah, it doesn't look like this. Oh, we do have NFP though. That's kind of tough.
Oh, NFP protocol.
Yeah, so
So what does that mean? Like, I low-key need to start like understanding like what the, like, because there's certain days that ICT and like you've said not to trade, right? And I think I might start like following through on that because I'd rather not just get lucky on a trade that day.
Mm-hmm.
Like, you know what I mean? So
Yeah,
what are like the main news events? Like, because I see people say like for like some of the news events, like they don't trade on the days before it, but then they trade the day on it because of like the way the price action is. But they just wait until the news drops. So I don't really know how that works.
It really depends on the news event, but the main news events that are like gonna be like heavily manipulated where you kind of want to avoid trading before it is gonna be like FOMC, NFP, Powell or anybody speaking, Trump, you know, the kind of like these are the main four where it's like if one of these are happening, then you want to avoid the day before it. And even the day it drops, it's best to avoid, but you can still trade it. Like, I'll still trade NFP Friday if the market looks clean. But so NFP, though, is kind of a funky one because NFP week, you have a news drop on Friday and on Wednesday for the... So one is like ADP, NFP, and the other one's just regular. And... So on these weeks, like next week, it's 100% best to avoid the Thursday. Thursday on the NFP week, I will avoid like 100% of the time. Wednesday is also going to be usually pretty tricky, but if you can find a trade in the morning session, then like, you know, it's okay. And Monday and Tuesday are okay too, but Tuesday, you want to focus mainly on the morning session. Tuesday you don't really want to go later on into the day, just because you have that 5 or 8:30 Eastern ADP NFP on Wednesday. So Monday is on an NFP week. You want to put a lot of emphasis on Monday because it'll provide a nice setup on that Monday, just because it like. It's going into the protocol where, like, you're pretty much not supposed to be trading. You know what I'm saying? It's going to be heavily manipulated. And you'll find trades that, like, just don't play out. You know, like, everything will be perfect, but it just won't work. And that's just how it's going to be, like. Oh. Oh, shit. My Discord is bugging. Yo, can you hear me? Yo, can you hear me?
Yeah. So,
I don't know what was going on there.
figure.
Oh, what was
I'm gonna ask you, well, there's two things I'm gonna ask you. The first one is, do you like backtest at all, or did you ever?
Yeah, I mean, not like formally with like notes or whatever, but anytime I'd like kind of want to go into another concept, I just like go to the past like week or so and just check out how it would have played out. And then from there, it was mainly forward testing, yeah.
Is forward testing just where you like live test it on paper?
Yeah, or even just like tape read it, you know what I'm saying? Just like watch it.
Oh yeah, I do that sometimes. I'll just like, even if like I missed an entry by like a little bit, I'll just like throw on the like the stop thing or whatever and just watch it and see if it would have played out.
Yeah.
Or like if I'm just like not even wanting to like paper trade it, I'll just watch it.
Yeah.
Yeah, for backtesting, I mean, I don't really use like FX replay like some other people. I mainly just like I'll either go through the previous days, like the previous day, or like a session that I didn't trade, like I'll go through like London session, and I'll just see I'll just look through it, and if I see anything that looks like it might have been my model, then I go through and figure out what confluences there were, and then I write it out.
That's fair. Yeah. That's a good one.
Sometimes if I wake up late or something, if I wake up at 11 and I just missed the morning, I'll just go, instead of trading or whatever, I'll just go back through the morning and could have been taken. So.
No, that's smart. So that's definitely a good way to handle things, because you're not letting any emotions get in. You're just studying. You know what I'm saying?
Mm-hmm. Yeah. Okay, but anyways, so I was just wondering what days you are no trades
So Thursday, this week I won't be trading for sure.
Thursday. So what is Thursday?
There's no news on Thursday, but it's the day before NFP.
Bro, what the? Hold on, I'm trying to get on Forex Factory and it's just being so annoying. There we go. Now I put on the week. I need to get it on USA only too. There we go. Okay, cool. Oh yeah, so we have no news Monday, Gilts on Tuesday. Oh, I see. So what is NFP? I don't even see that on the Friday.
Oh, it's called non-farm employment change.
Okay, I see it. Well, what is the ADP non-farm employment change on Wednesday?
Honestly, I don't really completely know what the data release is. Honestly, I'll look it up right now. But it's just kind of like another non-farm payroll event, but it's less important.
So what's the reasoning by not trading Thursday? Is that because you don't know what it's gonna do before the news? So.
It's pretty much I can anticipate it, but I'm more likely to be wrong, and I'm more likely to just they're more likely to hold the market. You know what I'm saying? Rather than let it move.
Be a breakout on Okay, so I'm just gonna write that down. So you prefer not to trade the day before?
Yeah. Wait, did you just? Oh my shit cut out again. I don't know what's going on with my Wi-Fi.
Trade days before it or on it or anything like that.
Yo, hello.
Yeah.
Yo, my bad. You just cut out. What'd you say?
Oh, so is there any other days that you prefer not to make trades, or is there on certain news days or before? Is there any other ones that I need to know about?
Yeah. All right. So FOMC. It's best to avoid that day in general as well, rather than just the day before. You can try to trade the day before for FOMC.
So avoid the day before and the day of?
Yeah, for FOMC. I mean, mainly just the day of, if you could write that specifically. And then what else?
Anything else?
Powell or Trump. If they're speaking, you just want to avoid the day of. And then for NFP this week, do you want to avoid the day before and the day of if you can, if there's no setup. And then also try to avoid the Wednesday as well.
You mean a Wednesday?
So this week, because it's yeah. Anytime it's NFP, it's gonna be you're not trading as much, for sure.
Okay. What if I see a really good setup and I just deleverage and lower my risk?
On Wednesday?
Yeah.
Yeah, you can take that. On Thursday, I still wouldn't take it.
So I'm probably on Wednesday. Well, I'm still gonna because now that I'm doing the challenges or whatever, then I'll follow the rules of the news days for that, and then I'll just paper trade the days.
Yeah, that's fair. That's fair. That's fair.
Okay.
Oh, but in NFP week, you want to try to trade Monday as much as you can. I'm not gonna lie.
Oh, really?
Yeah. Or just just try to get your setup out on Monday, because it'll usually provide a really nice setup on Monday of NFP week.
Oh, that makes sense because I've noticed that like a lot of people say don't trade no news Monday, but then I feel like on the NFP weeks it's always pretty good, so that makes sense why
Yeah.
you should.
And like it's a no news Monday again tomorrow, I'm pretty sure. But I'm still gonna be trading it for sure. Yeah, I think that's the three main ones: FOMC, Powell or Trump, and NFP. I'll just go through the Forex Factory for next week too, just to check. Oh, the federal funds rate, that's usually going to be on FOMC day as well. So just same rules as FOMC. Avoid that day. And if you can, the day before. But if you see like a beautiful setup.
One day a week we can trade.
Yeah.
Guess you gotta get the setups up then. Sure. I mean, realistically, like, if I actually do get like funded and shit, like, I really don't want to take that many trades if I don't have to. I'd rather just be consistent and like take less.
Yeah, definitely.
Okay, so you can go into the stuff you wanted to talk about now, and if I have any questions.
Alright, bet. I should have been looking for this example before, but there was this day. So I'm basically just looking for this this example of this other form of the immediate rebalance. It's pretty much the same thing, but it's got like slightly different rules. Okay, I found it. Alright. So this, right? So you know how an immediate rebalance is like the third candle comes to touch the first candle's high, like pretty much not creating the fair value gap.
Wait, okay, can you repeat that? Sorry, I kind of cut out.
No, you're good. So an immediate rebalance is like I've explained, like it's just the three candle formation where the third candle touches the first candle's high or first candle's low if you're bearish. And it does it like relatively pretty perfectly, with a couple points of.
Wait, do you have an example? Is that what you're pointing
at? Let me pull up. Let me save this here. Monday, 8:30. So the regular immediate rebalance, like I think you've seen it, in my.
Yeah, where the candles, yeah.
So let me. Yeah, let me try to pull. I swear I had one.
It's like I don't really know like if I'm using it correctly because like I see it like present in a lot of the trades I take, but I don't know if I'm like using it correctly, if that makes sense. Like,
yeah.
I'm really just using it to like confirm like my bias. You know what I mean?
No,
so,
I mean
if
that's.
I see it in the direction of my like the trade that I'm already in, then I know like I want to stay in it. You know what I mean?
Yeah.
I don't really use it for like entries or anything. I don't know if that's how you're supposed to use it.
No, I mean you can use it any way you want. The way you're using it is the way I like to use it the most. But I'll use it for entries sometimes if I need to. You know what I'm saying?
And then, now that you brought that up, there was I'm gonna reply to it in the analysis chat. You can just go up to this. So
yeah.
He said like he showed the immediate rebalance. I don't know if this is exactly what you're about to talk about,
Mm-hmm.
but why is that entire box an immediate rebalance? I thought that it was supposed to be like the immediate rebalance was like where the two. Like, I don't see the immediate rebalance there.
Oh, where the two... Okay, yeah. The technical, like, the point of immediate rebalance was where the two, like, wicks, like, tapped each other. You know what I'm saying?
But why does he take... What is that box?
Okay, so he's...
The entirety of the lower wick?
Yeah, he's taking the wick. Yeah, exactly. That's pretty much going to be the PD array that's important with the immediate rebalance. You know what I'm saying?
So if it was... this is, in this case, a bullish immediate rebalance. Take the right candle's like bottom wick.
Yeah.
That made and then what about if it was a bearish immediate rebalance? Use the left candle's bottom wick.
You would still use the right candle, but you'd use the
wick?
top wick. Yeah.
Okay.
Yeah.
Makes sense. Gotcha.
I found this kind of not perfect example, but it's still here of the regular immediate rebalance. Or I don't know if I want to use this.
What's the difference between the regular one and the non-regular one?
I'll explain the non-regular one in a second, but this one, it just looks a little bit funky. You know what I'm saying? It doesn't look the best. but it's still there. So also with the volume imbalance, you wanna actually I don't want to go into those rules too much yet.
I think you've already taught me that, like the rules with the immediate rebalance with the volume imbalance.
Yeah, I've taught you some. There's kind of like another type, but I don't want to go into this one just because I don't fully know the rules for it. Yeah, like I could just be.
Oh yeah, that's fine. If you don't want to go into it.
But all right, since we looked at the Gavin example, I'll just show you the second form of the immediate rebalance I was gonna pull up. So Monday 8:30. All right, and ICT also talks about this in his like recent video. He doesn't call it an immediate rebalance, but it's still there. So in this case, right here, do you see this fair value gap?
You can zoom in. I probably
Yeah.
kind of hard for me to see just because this goes zoomed out.
I got you.
Or you'd be like marking for like PD rays out from so zoomed out. I don't even know how you like see the wick spread.
Wait, sorry, do you see this?
Yes. Perfect.
All right, so you see how this third candle, like it ended up creating the fair value gap. It didn't come back and touch the first candle's low. So there wasn't an immediate rebound.
How is that an immediate rebound?
It's okay. So a new rule I haven't taught you yet. If the candle right after the fair value gap gets created fills the fair value gap, with the exception of like a couple handles of imprecision, that's also an immediate rebalance.
Oh, you can. So what can I use that for then? Like,
so it's pretty much
prices to continue in the same direction.
Yeah, so you want it. It's kind of the same thing with the original immediate rebalance. You want to see like speed lower, and you want to see the wick. Wait, what?
That's pretty strong then, like as an indicator. I feel like.
Yeah, it's definitely strong, but it has to be the first candle after the fair value gap gets created.
Yeah, and it has to fill the whole thing. Like,
yeah.
Do you want to see it like wick up into it and fill it and then come back down, or can it like go all the way above it with the body?
It's best if you just see it as a wick, because that's kind of showing you that yes, this is like.
Yeah, you're also getting a rejection.
Yeah, exactly. So yeah, once you like, a way you could, or actually, let me go into the other rule first. So, when you see it happen like this, the immediate rebalance, where the candle after fills it and creates the immediate rebalance, you want to assume that immediate rebalance is more likely to be traded back to. So like right here, it trades back into the fair value gap or the immediate rebalance.
The over to the right?
Yeah. Yeah, right over here.
Do you prefer, like, if you saw this, right, and it was following, like, let's say we had just tapped into a presentation above it and we had speed lower and then this happened, would you be able to, like, confidently take a trade right after it creates the imbalance, or do you want to see it trade back into it? Like would you take your entry like initially right there, or would you wait for it to come back in like and get over on the right?
I will. Okay, so right here, if I had like the super strong bias and I was absolutely for certain that it was gonna spool the target right there, yeah, I could take a short as soon as it taps into the wick. So like, let me mark out the whole wick real quick and take off the fair value gap. So as soon as it taps into this wick right here with this candle, so like this wick, as soon as it taps into it, I can go short, but I have to be like confident that my trade is going to go in my direction. But if I wasn't confident, a way I could trade it is like, if I'm anticipating speed lower, I can try to find something right here to give me a narrative to go short on, because it's already confirmed that it's willing to stay beneath the consequent encroachment of that wick.
Oh, I was gonna ask why you take the 1 to 0 like fib.
Yeah, I want to get that midpoint of it right there.
And do you move, so after, like, so you have the fair value gap gets created with the, so like, sorry, I need to,
No, you're
so why'd you move the block from the fair value gap to the wick?
so
Because the wick is technically the immediate rebalance?
yeah, exactly. You can still keep the fair value gap. You know, you can see that's like, it ends up being precise, but the wick is a little bit more important to me. You know what I'm saying? Because that's the immediate rebalance wick. So yeah, as it trades up into it, I can, if I had a strong bias, I can go short. But if I don't have a strong bias, I can see the fact that we weren't able to breach the midpoint and we rolled lower aggressively. So I can look for a potential short around here to target my target. If there is, like, let's say there was a sell side liquidity pool back here, relative equal lows, and we come after we like tap the wick, we come down and smack it, I wouldn't be looking really for shorts here, because it's like we're in a discount. We've hit like a high time frame target potentially, and the immediate rebalance is more likely to like now be traded back to. But then if there's still a target unfulfilled lower, then yeah, that's where I would take it for, and I would assume that I can still go short around this block of price action right here. But later on, a whole nother thing. So the move gets deferred around here. Like we're still looking for lower prices. You can see market still ends up going lower. But this around here, the move gets deferred and we start going higher. Adding a little bit of high resistance into that, we after we like create this low and start trading higher, we need to come, or we don't need to, but we end up coming down and sweeping the sell side liquidity and filling this fair value gap right here. And then we still end up rolling higher. So that's already, you got your signature that we're most likely in high resistance conditions. And you can assume that they're most likely going to set a trap and then run it the other direction. But so far we've only... Wait, what's up?
What do you mean by a trap?
So like they'll run it aggressively in one direction and make it seem like it's going to stay going that direction. You know what I'm saying? Like especially if you were just like a retail trader with like nothing of this in mind, you would think, hey, this is going to be a breakout from this high. And now we're just going to spool higher all the way to, all-time highs or whatever. You know what I'm saying? Just like whatever they're going to...
What is the difference between us and like a retail trader? Because I thought we're retail traders.
Okay, we're technically retail traders, yeah. But when I say retail trader, I mean...
You're talking about like a trader that doesn't really understand like the algorithm.
Yeah, or they'll even like deny the algorithm. They'll say it's all like buying and selling pressure. They'll look for certain things that I wouldn't necessarily look for, like if they see a consolidation like this and then they see it roll higher, that's like, to them, that's a bull flag. You know what I'm saying? And they want to see it continue higher from there. And so like pretty much like what this is setting up, this consolidation and everything, it's showing smart money that we're likely in high resistance conditions. And it's showing retail that, hey, we're going to boom up higher. And if smart money knows that it's probably not going to boom up higher, but retail knows it, or retail thinks it's probably going to boom up higher, it's most likely going to fade retail. You know what I'm saying? So like,
yeah, that makes sense.
It
wants to do the opposite of what all the retail traders are doing.
Exactly. Yeah. It wants to... The whole goal of the algorithm is just to take money away from the uninformed and give it to the
So we're
informed.
basically just trying to, like, use the context clues that it leaves to just follow the smart money, basically.
Yeah, exactly. Yeah. That's exactly what we're doing.
Okay, cool.
Yeah. But yeah, so pretty much, yeah, I see this. I want to assume that we're likely in high resistance, but I can be wrong, which is why I wait. So we head up higher back into this point where it's already determined that we might want to go lower from there because it's a the immediate rebalance, I told you we would probably want to, I actually don't know if I mentioned this, but if this form of the immediate rebalance shows up, where the fair value gaps get created and then the next candle fills it, you want to assume that it's much more likely to return there to the immediate rebalance later on. So like right here when it does this, it's much more likely to do that just because it's this form of the immediate rebalance.
So you could low-key hit some crazy scalps here then, right?
Yeah.
You could take it off the initial immediate rebalance if it respects it, lower, and then if you see like a bit like a bullish indicator, so if you had like an inverse fair value gap or an S&P, then you could take like a bullish scalp all the way back up to the immediate rebalance, and then if it respects it and goes lower again, then you can take the scalp all the way back up.
Yep. Yeah, there's like
the powerful idea, right?
Yeah. There's a
immediate rebalance is the most like the best PD rate.
It's definitely one of the.
A lot of my winning trades end up having an immediate rebalance somewhere.
Yeah, it's definitely the best, or not the best, but I can't say for sure if it's the best, but it's definitely one of the strongest signatures of speed that you'll ever see. Yeah, if you see one of these in your trade direction, it's like, yeah, it's here. It's likely it's gonna rip quickly. You know what I'm saying?
I love like when I enter something off like another confluence and then I see a immediate rebalance in the direction of my trade.
Yeah. It's oh yeah.
Right after it.
Yeah. So I definitely like to use these. I can't say for sure that they're the strongest because like I don't know. I do like breakaway gaps as well. Yeah, so I just can't say. But but by the way, if you were looking for a long here to trade back to that immediate rebalance, anytime you're in high resistance, the best entries will be a turtle soup combined with the filling of a PD array. So like the filling of a fair value gap, if it completely fills it after turtle souping, that's going to be your optimal entry.
Said when you're like, hold up. And that can be for longs or shorts, right?
Yeah, so like let me type it out honestly myself too. If you're bullish and you're in high resistance, best longs are gonna be a turtle soup combined with a fill of and I'll just keep it limited to fair value gaps for now.
Okay.
Yeah. And then if you're bearish, it's the same exact thing. I didn't really. If you're in high resistance, best trades are gonna be a turtle soup combined with the fill of a fair value gap. Yeah.
Is this an example right here that you were?
Yeah. So then this right here, normally, ideally, you want to see when it enters high resistance, it won't normally get out of it this fast. So like, you would normally want to see it like, you see this first signature of high resistance. You know, it sweeps the liquidity, fills the fair value gap, and then starts heading higher. And then
where are you? Sorry, you're like, for some reason your like screen share is delayed. So like, just give me 1 second.
Oh, you're
I'm
good.
trying to like re-look at it. I don't know why it's.
Maybe I can try to refresh it too. I don't know why it's doing all that. Oh yeah, I didn't know. I see. I think my bad. I think my like Wi-Fi is like bugging. I don't know what's going on. Okay, check it out now. Oh my god. Yeah, hello.
Yo.
Dude, my internet is being like horrible right now. I don't know what's going on. But is it better now?
Yeah, it's a little bit better.
Yeah, so this I was saying earlier, so it sweeps this liquidity right here and fills this fair value gap. And then that's kind of your first signature of high resistance. There could probably be one before, but I just don't see it right now. And normally after you see that first signature, you want to assume that it'll want to stay in high resistance for a little, like a longer amount of time. Normally it won't just show the first signature and then create the trap. It'll usually like show the first signature. Wait, what's up?
Sorry. Where's the turtle soup though? I'm just trying to figure out where it was.
Oh, this pool of liquidity right here. Let me put a.
And does a turtle soup only happen after like a liquidity sweep like that? I mean, I don't really understand the turtle soup.
It's all it is just I should have just said best trades are gonna be a liquidity sweep combined with a fair value gap. And a turtle soup is just if you went long below the liquidity sweep. You know what I'm saying? It's nothing really. It's just a name for it. That's all.
So where's the trade that you would have taken here? Would you have taken this or no?
I wouldn't have taken this. I'm not like okay. I did take a trade later on, and that's I think it's in my journal. If it's not, I'll send it. But this long I wouldn't have taken because it just showed the first signature of high resistance and then pretty much automatically set the trap. So like right here we showed high resistance and then this is the trap. And then this is the real move. It's kind of like accumulation, manipulation, distribution.
Yeah, I was going to say, it looks a lot like AMD.
Yeah.
What was the time that this happened at?
This was Monday around like 12 Eastern. 12 p.m.
Wait, when did that manipulation happen before the move down? What time? Like go to the top where it tapped into the 0.5.
It was at 12:43. That was the high.
Oh, you're on a.
Yeah, I'm on Pacific. That's why the times are a little different. Yeah, it won't always look this clean. I'm not gonna lie. In high resistance, because it'll usually want to do multiple legs of high resistance. So like, it'll show this first, and then later on we'll sweep this liquidity, and then come all the way down. Maybe create some sell side. And then fill this fair value gap back here, this one. And then go higher. Or it'll even sweep the buy side. And then if it gets excited lower, it'll even like run all the way down here again. Sweep the sell side one more time. Same fair value gap from earlier. And then run higher. And then you can assume that high resistance is going to continue. Because, that's just... It just keeps sweeping liquidity.
Yes.
But yeah, in this case, the high resistance was set, and then the trap was set. We had the fair value gap plus immediate rebalance, or technically the same thing. And then the bodies respect the fair value gap, which is a good thing. And the wicks respect that 0.5 level. We trade to it, but we don't really breach it. You know what I'm saying? Like, every single trade towards it is, like, sharp and quick. And then we break lower. I wish I had my stuff from earlier here, too, but if I also incorporate... I know I've been pushing it a little bit, just because I've been using it a lot more recently. I was telling Gavin this, too. I've been every 15-minute first presentation.
Bro.
You don't like have to extend it like that.
Every 15 minutes shit. Now it's going. Hey, next it's gonna be every 1 minute, every 30 seconds, every second, every half second, bro. It's gonna be cooked soon, bro.
But I'm saying, bro, this shit works, bro. I'm saying this shit works.
Bro, no way this shit works, bro.
I'm telling you, this shit works.
There's a first, bro.
But okay, you don't need to extend it like that. All right, let me show you how I would go about using it and how I have been using it. So
are you basically saying that like every 15 minutes, the first fair value gap after is a first presentation?
Yeah, that's exactly what I'm saying.
Show me how you use it.
Wait, what'd you say?
Show me how you use it. I wanna
Yeah. All right, so I've already explained this area. You know what I'm saying? We predetermined we can expect it to maybe want to roll higher back up to this immediate rebalance. And then we see this high resistance signature. It fills the fair value gap like earlier, that earlier one that we used, and sweeps the liquidity. But the bodies respect this tiny fair value gap right here. And this is the first fair value gap after 12 Eastern. So 12:01, this fair value gap gets created. So my eye is more leaning, like I still am paying attention to the fill of this fair value gap because of high resistance, you know. That's just the signature I'd be looking for.
Yeah.
But the bodies, I'm mainly checking right here. And I didn't take a trade off of this. I don't think I would. But, you know, you can see that this is still important. You know what I'm saying? This fair value gap especially. And then if we just continue on with it, so that's at 12 o'clock. So let's go to 12:15. And the first fair value gap that forms after there would be this bearish one right here. Yeah, I think this is the bearish one. So just extend that out. That fair value gap gets inversed pretty cleanly later on. And then let's look for 12:30. So 12:31. We've got this fair value gap right here. And then while this fair value gap is getting inversed, the bodies are still respecting this one. And then 12:45, we start to break lower. And then we have this as our 12:45 first presentation. And we still have all these back in price action. And you don't have to keep these, okay? I'm telling you, like, I don't keep them for longer than, like, my trade duration. Or, like, the setup that I'm looking for, I don't keep them longer than that. I don't extend them for a couple of days. I'll just keep them for what I'm looking at right now. And in this scenario, I wanted to see it be bearish from this immediate rebalance. So I'm looking for the first time-based fair value gap after we've tapped it to act like a breakaway gap. So right here,
And what constitutes a breakaway gap? Like, how do you know?
It's pretty... Alright, so I've explained to you, like, a couple forms. You know what I'm saying? Like, if the body or whatever and then leaves it.
Yeah.
There's also one form where it's just, like, the first fair value gap after the high has been set. So, like, if you're bearish, the first bearish fair value gap after the high has been set, that should act as a breakaway. But it's better if it has a time base around it. So, like, in this case, I'm using the 15-minute first presentation. So, especially because this is the first fair value gap and it has time around it, I want to especially see this act as a breakaway gap.
Gotcha.
And, my bad. Oh. And then, so that, it gets tapped into, but it's still treated relatively as a breakaway gap. And then we trade down into this earlier first presentation, inverse the high right here, close inside of it and tap the high, and then run lower, close outside of it, tap the low, break through this one. This isn't technically a breakaway gap. This isn't one, but it ends up being one. But based on the the other rules I shared, it's not one. And then we've got this tiny fair value gap on the bottom of it. It taps that perfectly, combined with the earlier fair value gap. Trade lower. Body is closed right on the low of this earlier one. Trade lower, and then tap into it one more time, and then trade aggressively lower. So you can see, like, all right, like, it's a little bit, you have a lot on your chart, you know what I'm saying? Like, I got all these boxes.
Are those all considered breakaways, or just that one, just the bearish one?
Wait, which, are you talking about all the 15-minute ones?
Like, is the breakaway gap only that bearish one?
Yeah, I would consider it, okay.
The first value gap after the high was set. And we also had the high being set at the immediate rebounds.
Yeah. So this would be the main breakaway gap I'm looking for.
You would have taken?
Let me see where I actually ended up getting my entry. Let me double check.
Oh, you did take this?
Yeah, I did take this. Okay, it's not in my journal. I'll send it in real quick. One sec.
Was there like end dogs or anything around?
I didn't use. Let me double check. I'm not gonna lie. I don't think I used any end dog or anything.
So you do take trades, you not using any like references then?
Yeah, especially recently with every 15-minute, because like it's such a nice tool, and you don't need the end dogs and stuff as much if you have these.
Really? Okay.
So I sent in the trade.
How do I really use, like, so just every 15 minutes I mark out the first fair value gap? Like, I don't really understand, like, how to use it.
Yeah, I mean, alright, so you don't really, it's pretty much kind of, the way I use it is like a guide to which fair value gaps I want to look at. So, like, if I'm looking for an inversion fair value gap, I'm looking for it to be time-based. Or another scenario, I have a trade from it, but I don't want to pull that up, or I can actually. Okay, this trade that I sent in. So can you go head to my journal real quick?
Yeah.
So, the trade that I sent in on April 23rd at 10:43 Eastern, so I think it'd be 9:43 your time.
Yeah.
So the highest fair value gap that I used, so the ones that the bodies end up respecting, and I took like a little stop right there.
Yeah, I see it.
Yeah, so that fair value gap wasn't time-based. But if you look just above it, you see how there's that like super tiny like balanced price range right there?
Hold on.
Actually, let me pull it up on my chart. I think that'd make it much easier.
Yeah, I think I'm just... Also, after this, if you could explain what liquidity voids are.
Oh, yeah, I got you. Yo, when did I take this rate?
How many trades do you take on average per week?
Wait, what?
How many trades do you usually take a week on live?
I don't know. I usually, like, on average, I'd say I take like 3-4 a day.
Oh, dang. Okay.
Yeah. Especially if I find the setup. But some days, like you've seen, I'll only take like one trade a day. You know what I'm saying? Just because.
What's your win rate? You said it's pretty high, right?
Yeah, it's around, like, including break evens and user error, it's around like 85%. Yeah, but
Mine this month is, I think, like 64%.
It's still good, you know what I'm saying? Above 50 is definitely...
Yeah, I mean, if I can get it above, like, if I can get it to 65 to 70 with, because, like, all of mine are, like, 1 to 3 plus, or, like, 1 to 4, 1 to 5, so it's, like...
Yeah.
If I can get it to, like, 70, I feel like that's a pretty good sweet spot, because I don't know, my stops are, like, not crazy big. They used to be bigger, but now they're lower, and then my RR is pretty high, so...
Yeah.
I think 70 is not bad. If I lowered my RR to, like, strictly only taking, like, 1 to 2, 1 to 3, I'd probably be a higher win rate. But
yeah, but, I mean, I feel like you're doing...
a shit ton of trades on paper, though, so that's why it's, like, lower.
I see.
It'll definitely be different, because I'm hoping that I get funded on this account.
Yeah.
Yeah,
I mean...
Just keep the grind going.
Yeah. I feel like as long as you keep doing what you're doing, you'll be good, bro. Like, it seems like you're doing, like, very solid for somebody who's, like, just starting off a couple months back. Like, extremely solid.
Have any you used to, like, because when I was looking at the old cord, you used to, like, help people that, like, went to our school, right?
Yeah, a couple people.
Did any of them end up, like, following through or not?
Nah, not really, bro. I mean, to be fair, when I first started, like, that old cord, when I first really started it, I was a little bit buns. Like, I wasn't, like, buns, but, like, I still needed...
Like, I was looking in, like, some of your old, like, I don't know, I went back to, like, the beginning, and, like, some of your old, like, reviews were, like, a little interesting.
Yeah.
Like, I just remember some of them were, like, just a lot different than what you use now. Like, you were using a lot of, like, market maker models.
Mm-hmm.
I don't know, stuff like that. You also didn't really use NDogs or logs.
Yeah.
You used, like, breakers, I remember more. Like,
yeah.
just a lot of breakers, a lot of order blocks.
Mm-hmm.
Some deviations, but, like, that was kind of...
I was pretty much just putting emphasis on, like, the wrong things back then. You know what I'm saying? Like, I wasn't, like... Yeah. I wasn't, like, horrible. I was still doing my steady, but it was just I was focusing on the wrong things.
Yeah. I mean, shit, that's how it be.
Yeah. Oh, all right, I found that example I was talking about earlier. So, so this is the fair value gap the higher fair value gap I was talking about. And you can take the combination as well, but specifically the higher one was a little bit more important to me because if we look back here, we've got these two like overlapping. So this bullish fair value gap right here, and then there's this tiny space with this bearish fair value gap where it overlaps.
Oh, I see it, yeah.
So that's a balanced price range. And remember to always include the volume imbalance if there is one.
And then the balanced price range, you just don't want to see price go above the candle that makes the right fair value gap, right?
Yeah. So this would be, if you took a short right here, this would be your stop loss. You wouldn't want it to go above here. And if it does go above here and still rolls lower, that's another... this is the bullish fair value gap is first, and then the bearish fair value gap is second. So the middle candle of the second fair value gap, that's going to be your stop.
Okay, cool.
But yeah, if it takes the stop and still rolls lower, that's another signature of high resistance, just letting you know. But yeah, later with my trade, you see how in the bearish fair value gap that is part of the balanced price range, the body is inside the fair value gap, and then it leaves the fair value gap. So let me take this first one off. Let me just keep the bearish fair value gap on my chart. So this right here, you see how the body, it opens up, this bearish candle's body, this one. It opens up inside of the inside of the fair value gap.
Yeah.
and then it smacks lower. So the body is inside here, and now it's like much lower. So this should be a breakaway gap per the rules. And then also another little confluence with that is if you take the 9:45 Eastern fair value gap, you'd find this is the inversion fair value gap, or whatever, the bullish fair value gap that made up the balance price range. So that's just a little extra confluence on why this fair value gap has more importance. And that's why I don't need this one to be a time-based fair value gap either, because it's already got some time base around it from before. It's a little complicated. I don't really need you to understand that too much, but it's just, that's another way I'll use these every 15 minute. And then I'll just continue on with that, just checking on the every 15 minutes, so like 7 o'clock or 10 o'clock Eastern.
Did you take this trade? Is that what you were saying? Or no?
Yeah, I took this trade inside this fair value gap, and I actually got stopped because I'm expecting this to be a breakaway, right? And it does at first, yeah, but then I'm just not watching it for that, because this is like 10 p.m. Eastern around here, so like it's not really normal trading hours. But I see like later on we sweep the liquidity, like a high resistance signature, and then fill this fair value gap, so, and then run higher aggressively. Normally you want to see it have another spool higher, I guess, but again, like you see, it just kind of sets the trap. It's a little bit less obvious this time. This was more of a higher risk short with just a couple other things behind it. I went short originally when it was trading towards this consequent encroachment of this fair value gap, and you see how the bodies are kind of like hugging it right here.
Yeah.
So that was a really good signature that I was wanting to see. And then I didn't want it to see it fill the fair value gap, but my stop was up here originally. But then I saw it fill the fair value gap, and then within that same candle, it didn't like, when it filled it, it wasn't aggressive at first about trading lower. So when I saw it trading higher quickly, I was just like, I'll just take it off early. I don't need it to trade up here. But then we end up, I was just wrong about that. We end up like smacking down.
Wait, so I'm confused. What is the trade you took here? You said you got stopped. Like, where did you enter and where was your stop?
My entry was, I wish I could. Do you know if there's a circle or something?
What do you mean a circle?
Oh, I got it. Like a drawing.
You can just use the. You can just. You know how to use the like the thing.
Oh yeah.
I love using that.
Yeah. I forgot about that. So this was my trade.
Yeah, there you go.
And let me see where I ended up taking it off. Let me double check. So I took it. I was trying to see it roll lower towards these relative equal lows, 15 minute. And but then I took a stop a little bit early just because I had a couple.
That's insane. Trade, man.
Yeah. This is a nice one.
1 to 8. Holy.
Oh, but okay, so in my journal, you'll see I took an unnecessary stop. Like literally, I'm not gonna lie, pretty much right at the high. I got like top ticked. And then I had to get a re-entry right here. As soon as I saw this volume imbalance get created, or this that actually leads me to my next section. This liquidity void, when this gets created, I can go long or I can go short, and I don't even need to wait for it to trade up into there, because it's a breakaway gap, I guess technically. But and then I just put my stop around the high of the fair value gap, and then same target.
Like how much of a what are your stops normally? Like 3? Like are they like a certain percentage of your account, or are they just
I just
the trade rules are?
just say wherever the trade is like telling me, I'd like to keep my stop around like 10 points to 20 points. 20 points is pushing it, but 10 to 20
I've
points.
seen a lot of people say 10 points is the amount that they normally do.
Yeah, 10 points is a good number. And it's usually like, if the market's not crazy volatile, that's like a solid stop. Like if you have the right conditions, like it shouldn't really trade up 10 points. Like normally you want to give it if it's super volatile, you got to give it a little bit of room. But 10 point stop is usually pretty nice.
That makes sense.
And then I took I took an early stop right here. So like as it traded up into the reasoning why I took my trade off early. So I'd already took the stop earlier, so I kind of wanted to lock in some profit. And another thing was actually another user error. I thought there was a volume imbalance right here between these two candles. And then when I saw it create it, and then like it taps into it right here, what I was assuming, and then it starts to roll lower, I just figured if it's going to tap into it and kind of aggressively react like that, I wouldn't really want it to return to it. That was honestly, I don't want to go too deep into that because that was just aggressive trailing, like super aggressive. It didn't have like too much logic, I guess, behind it. But that was my reasoning behind taking that.
Did the trade fully play out to all the way at the lows?
Yeah.
Did you take this on live?
I did.
How much did you make?
It's in my journal. I made like 620.
Oh, was it? Oh, because it was at like a non, like, volatile time, right?
Yeah, and this is also like, remember, this is like 10 p.m. Eastern. So like,
Bro, because sometimes I swear, like, in the mornings, like, some days I'll like, I don't know, I'll like put my shit out like 100 points and it only is like or it'll be like $800 profit. And then other times I'll move it out like 15 points and it's like $1,000.
Yeah. It's
like I don't really understand how that works.
It's honestly just the markets. It could be some problem with the leverage, maybe. Like especially if you're counting out the points and it's still not adding up. But a lot of the time it's just sometimes the market's gonna be really volatile and sometimes it's just not. Yeah, so like based
liquidity point just a volume imbalance or is it something different?
It's pretty much a volume imbalance that never got filled at all. So like the one I was talking about in my journal was this one right here. So it's this end dog. Let me put on the indicator real quick. Actually, let me take it off because there's a couple other things around here. So this is the entirety of the end dog. Okay, make it purple. And then, do you see how up here there's this portion where no wicks touch it at all? There's like no wicks going through it. Let me zoom in on it. This portion right here. Between this candle's low and this candle's high, there's a portion of that end dog that was left unfilled. And it later comes on and fills it. That's not like, it's not my interest yet. I guess the thought would be if you're bullish and you see this in the direction of your trade, you can assume that it's probably going to want to run all the way until it gets to there. Because this is like a drawn liquidity, basically. But, yeah, so we leave that unfilled. Yeah, drawn liquidity for the run higher. But I'm keeping it on my chart because they left this liquidity void for like a reason. You know what I'm saying? Like you might not know that reason, but I had this marked out. Let me go through my whole thought process. So like, this is gonna sound like hindsight, but like back here, I saw this fair value gap, which is a time-based one, at 6:30 Eastern. It gets left open. and it's got like a time-based bounce right there, inversion fair value gap behind it as well. And then I see that we have this sell side liquidity and this sell side liquidity right here, so relative equal lows. But we've also got this liquidity void up here and these relative equal highs up here. So it's like it's a 50-50 back here. You know what I'm saying? Like, you really just want to wait for more data to see what's going to happen.
Yes.
So like pretty much what my whole thought process was, hey, if it comes back into this fair value gap and we sweep liquidity and fill it or something and start going higher, I'll assume I can like take a trade and just like sit through the high resistance and take it for up here, the liquidity void. But if we just want to have speed higher to the liquidity void, I want to look for it to come here and then maybe reject and then see what happens with this fair value gap. Like, it's pretty much like there's a lot of scenarios that can happen. I'm just looking for more data. And then later on, we fail to reach the fair value gap, fill the liquidity void, and then trade up to these relative equal highs. By the way, liquidity sweep, fair value gap fill. So high resistance, okay, that's just in your mind, high resistance, wait for the trap. Don't just like, pretty much like just don't get into a trade unless you're like certain that certain that everybody would think it's going to go the other way. So like, if you want to go short, you have to be more certain that retail thinks it's going to go higher when you're in high resistance. You just pretty much just wait for an extra layer of confirmation if that's like, if you don't want to enter off the trap or whatever. But yeah, so high resistance, waiting for the trap. We've got these relative equal highs right here. And by the way, these aren't really like too notable of relative equal highs. You know, it's just like two highs and then we've got like buy side up here. And that's like more buy side up here. Like that would technically be more notable because it's like external range liquidity and stuff. This is like kind of small. But if we're in high resistance especially, I want to see it fail to reach these highs. And if we're in high resistance and I'm bearish, okay? So I want to see it fail to reach this high up here and just use these highs to trade lower. So like ultimate target, if you're in high resistance, shouldn't be reached, I guess. Or I don't want to say it like that, actually. I don't want to go... I'll think of some better phrasing and then come back to you on that one. But yeah, the relative equal highs get swept. Trade lower. Attempt to trade higher from the end dog, but fail. And then I want to look for a signature where it uses this end dog to trade lower. Or it uses this liquidity void from earlier to trade lower. Okay, and that's a little bit picky and choosy because it's already been filled. But it was created and left for a reason. So I'm just going with that in mind. And then we've got these relative equal lows right before this fair value gap from earlier. So let me just extend this out. And then use the high to trade lower. Tap the low right here. It's going to displace lower. And then now I'm looking for it to stay beneath this low because it's kind of perfectly tapped that liquidity void from earlier, and we've displaced beneath this low, and the body's previously respected the end dog low right here. It's not perfect, but it's still there. So I'd prefer we stay beneath this low and not fill this fair value gap that gets created. So this new bearish fair value gap right here, I would prefer this doesn't get filled. And if it does, I treat it like I'd want it to be like the immediate rebalance fill. You know what I'm saying? So the next candle comes up, taps it, and then runs lower quickly. But it's already shown that it's not going to do that. Because we got 2 candles after now, and it hasn't filled it. And then sweep this low, and I'm still watching this fair value gap from earlier. And let's introduce the time-based fair value gaps as well. So this, again, 9:15 Eastern, first fair value gap after there. And then 9:30. Let's wait for that one. So we've kind of already shown a bunch of signatures. You can go short here, but I'm just gonna. I ended up for this trade using time-based fair value gaps. Time-based fair value gap. So I want to either look for this one to get inversed, or I just want to wait for another one to get created that I can trade off of. So looking for the 9:31 to form. But by the way, per the rules, you can go short here. Just letting you know. It ends up getting filled. Not the best signature, I'm not gonna lie, but I'll give it another opportunity to trade lower. So kind of this is another signature of high resistance, which I should have mentioned earlier. As we're trading down throughout all here, you see how it's kind of like sloppy and consolidating. That's kind of like you're in high resistance conditions. So like we don't necessarily do the fill the fair value gap or whatever super cleanly, but it's constantly needing to sweep buy side and have deep retracements before trading lower. So bearish conditions still, but it's slightly high resistance. But same thing, we've used that end dog low from earlier to trade lower. Not super cleanly, you know, I prefer it didn't even return back to that end dog low. But we're still using it to trade lower. And then this fair value gap from earlier, the 6:15 or the 9:15, we've traded beneath it. So I can assume that this was a potential trap, trying to convince people that it was going to be bullish. So I want to treat it as such for right now. I want to see if this fair value gap shows any signatures of being reclaimed, and then the 6:30 or the 9:30 fair value gap would be this bullish one right here. And you could take this tiny bearish one, but I would prefer not to use it because it's very small and there's kind of like a lot of trading behind it. So I'm going to use this bullish one right here. And wait one sec. So I want to see, let me make these different colors because it doesn't look as clean. I want to see this fair value gap get reclaimed and this fair value gap act as an inversion. It does so. And then I'll take the 645 fair value gap, which would be this one. Oh, and this is where we get to my trade. So yeah, the 645 fair value gap, we've got this one. It kind of aligns with this earlier inversion, so I can honestly just take it off. But I want to note like I mentioned to Slazzy earlier, we've got a bounce price range, a tiny one in between. And then so because of that, I can anticipate bearishness right there. And then this fair value gap as well, which created the bounce price range. I'm monitoring that, and I see that this candle aggressively breaks away from it, so the body opens up in here and then closes much lower. So I can anticipate this to be a breakaway gap. And yeah, you can potentially go short right here, like as this volume imbalance is created. But because we're trading into this earlier first presentation that I was looking at, I want to, I guess, give it a little bit more room and see if it wants to show me some signature that we're willing to break down from this fair value gap. So the breakaway gap, I want to see it remain open for now. But if we do trade back into it, I want to see some signature that we're willing to see stay away from the midpoint. And then that's the setup that I'm looking for. And then, yeah, this would normally, you would expect this to be a breakaway gap as well. If it was clean, low resistance, bearish conditions, and it would have just ran down to these lows. But we end up disrespecting it, coming back into the fair value gap. So that's your first signature that either high resistance or just something's not right. You know what I'm saying? And let me just add the 10 o'clock Eastern fair value gap right here as well. So as this gets created. And then let me take these off because these aren't really as important to me. I'm mainly watching this one that I want to be treated as a breakaway. And so second signature right here. Need to sweep this sell side, fill the fair value gap, trade higher, like I was mentioning to you. And then so yeah, we've got our two signatures of high resistance. So I want to assume that this bullish run is probably not going to be long-lived, okay? And it's better to wait for the signature before, but I just took a higher risk entry because I was pretty confident that it was willing to trade down to these lows. And especially because although this fair value gap wasn't inversed cleanly, I wasn't kind of anticipating it to be a little bit iffy with it and then later on reclaim it again. So like if you expect something to be inversed, but we kind of at first like we bounce around in it, showing kind of no respect, that doesn't mean you want to take it off. That just means you want to refer back to it at a later time. And then yeah, so I went short here, and I'll just play that out. And my stop loss was above here.
Wait, why exactly did you go short?
This I'm anticipating to be a breakaway gap. I'm pretty confident it's going to run to this south side liquidity pool. And the bodies are hugging the midpoint right here. You see that? So like the breakaway gap earlier, the bodies are kind of...
It's a breakaway gap because it's the first, but like, where's the... You said it has to be like a high created and it's the first fair value gap after it.
No, so this is a different form of the breakaway gap. This is breaking away from this fair value gap right here. Which is also balanced price range.
So if you have a balanced price range, then you're going to breakaway gap right after? Is that what you're saying?
So it's pretty much, you want to look for a point, like a predetermined reference point, okay? And it can be an end dog, a first presentation, or whatever. But in this case, I'm using this balanced price range, which also has the 15-minute first presentation behind it. And you want to see it trade, like, the signature you mainly want to see for the breakaway gap is you want to see the body open inside the reference point and then close aggressively away from the aggressive point, or the reference point. So like this candle right here, this candle, it opened up inside this fair value gap and then slammed lower. You know what I'm saying? It slammed beneath these lows and created this fair value gap right here. So this is a breakaway gap. Yeah, and you do want to be careful about choosing the reference point that you use, because if you're wrong, then it's not going to be a breakaway gap. So like, it has to have something behind it. Like this reference point that I used, it worked because it's a balanced price range with a 15-minute first presentation behind it. So yeah, that's what I'm looking for. And then the bodies hug the midpoint around here. So I want to see it tear lower now, pretty much, and start to attack these relative equal lows using all three of these fair value gaps, especially this red one. Because it's this old one that I've been looking for from earlier. And it was a previous breakaway gap, or it wasn't one per the rules, but it ended up being one. You know what I'm saying? Like, even if you don't anticipate it to be a breakaway gap, you can see that it's treated as such. Like, we never returned back into it until much later. And then, yeah, so I want to see this one get inversed. And then I'll go through, I'll take that stop too, like I did on live. So, bodies hug the midpoint. So, I as soon as I see this happen, I want to see the first candle that sweeps the buy side. I want to see that get respected. So, like, this candle that sweeps the buy side, I want it to trade lower from here and not trade above this candle now. But I mentioned this to Gavin the other day. You have to give it another candle's room as well. So you have to give it a second candle to trade slightly higher than this candle's high, just in case it wants to do so. Next candle. Oh, Zoom went a little bit too fast. I'll just stick with it. But yeah, so this next candle opens up, trades above the candle's high that swept the buy side, which I have to give it room for. But at the time, I took a stop, and that was due to user error. Just letting you know. And then I just got a re-entry as it traded, like, because I saw that we aggressively broke down, and I assumed that we wouldn't need to trade even to the high of this again. And so stop moved. And now I'm looking for these lows. And then ultimately I want to see these two lows get run too. And then I want to see this fair value gap act as an inversion. And if I see some signatures that tell me I'm wrong, I'm going to trail my stop, or I'm just going to take the position off. So, this is actually an immediate rebalance as well. Right here. So, it's a little less perfect, but we, yo, my bad. Is somebody...
No, you're good.
Okay. Yeah, so the reason this is an immediate rebalance is because we've got this earlier fair value gap I was using earlier. And then we've got pretty much like the 3-candle formation I was talking about earlier. It's just a little less clean. First candle is low. Third candle touches that with a little bit of room outside of it for imprecision. Inverse is this volume imbalance as well. So there's like kind of a lot of things telling you that this might be an immediate rebalance.
I don't understand how that follows the rules of the immediate rebalance.
Okay, yeah. Let me yeah, I was mentioning this to Gavin. I forgot to mention this to you as well. So the way I've taught you immediate rebalances before is it should trade beneath a low or whatever, and then first candle, pretty much like you would have this candle trade all the way up to the first candle's high, and that would be this. By the way, this is a drawing, but yeah, this would be an immediate rebalance. But there are a couple other forms, like the one I taught you, or the one candle after. And then there's one where it's ideally still following the rules where it's beneath the low. But there's one where the immediate rebalance happens at a specific point of reference. That's the best way I can point it, but it's pretty much like you have a predetermined, let's say, inversion fair value gap, like in this case, and then we trade beneath it and then create an immediate rebalance right on it. So this would be the point of immediate rebalance right down here, and then this would be your immediate rebalanced wick. It's a lot. I'm not gonna lie. I've explained to you a lot today, so it's good if you're confused. I'll explain it again another day. It's not a big deal.
Yeah.
But yeah, we end up trading lower. Do the whole shebang. I take my stop a little bit earlier, somewhere around here. And but yeah, it ends up playing down to those 15-minute lows. And this whole consolidation here is another thing. Like, I wouldn't want to be sitting in this either. Like, it's just kind of high resistance trading lower. So first low gets attacked, and then we get largely deferred. Sweep out this buy side liquidity. And then there's a 15-minute volume imbalance here. I don't want to mess up the replay mode, but if you go in the 15-minute around this time, you'll see there's a volume imbalance. You respect that. And then trade lower to the second low. My bad. I went into a lot deeper than I thought I would right there, which made it a little bit confusing. But key takeaway, I guess, what I'm trying to point out is that the main way I'm using these 15-minute fair value gaps, first of all, is just to give me another time reference. So, like, why specifically should it run here at this time, pretty much. That's one thing. Another thing is you want to try to identify high resistance when you can and avoid trading it, or look for a fill of a fair value gap past the liquidity sweep.
And do you need to go right now, or can I ask like one or two more things?
You can ask 1-2 questions, but yeah, I gotta dip in a sec.
Cool. Could you just explain real quick? Like, I see you when you're doing like your high time frame shit, like your like bias. You use like rejection blocks a lot.
Oh yeah.
Show that.
Yeah, I got you.
Cause like I've been doing a little bit more of like for like pre-market and shit, like trying to get like my daily bias, and I mainly have been using like fair value gaps, order blocks, like things like that. But if you could show rejection blocks, because I don't really understand what they're, and it seems like you use them a pretty good amount.
Yeah. Okay, let me go to a clean chart real quick. Okay, a rejection block is pretty much if you're bearish, it's going to be, so like, if you're bearish and you have like a higher retracement, like for example right here, your rejection block would be the highest bullish candle's wick, up higher wick. So like in this case, this would be the wick high to low. That would be the rejection block. It's a little less obvious one, so let me go back to this retracement. So this retracement with just 3 candles right here. The highest bullish candle with the wick. I want to take that and take that candle's wick. So the rejection block especially, the rejection block is pretty much going to be the whole wick. But it's pretty much the whole wick. And I'm going to hold in importance to the low, the midpoint, and not too much the high, I guess, because that's just going to be buy side. But the low and the midpoint, I have a lot of interest in.
And what makes that a rejection block again? Like, why that specific candle? Because a lot of the candles have, like, I don't know. Can you explain why that's a rejection block?
Yeah, it's like firstly, you're bearish, and it's the highest green candle in the retracement. And then second of all, it digs into something that might, like, it's rejecting off something, I guess. So like this volume imbalance, you can say, or like even the high of this fair value gap, you can say, or even the high end of this breaker, you can say. So like there's a couple things that's like tapping around here, and and it's also the highest candle in the retracement. So that's the reason why this one would be the rejection block. And then like if I were to, there's a couple other, you know what I'm saying, you can find rejection blocks. So like if I were trading later on, this would be a rejection block. This one. And then I was monitoring this as well. And then I was looking for this one to be a rejection block as well. This was a little bit iffy. But it's just it's a tiny retracement right here. And then taps this daily volume imbalance one last time. Yeah, breaks away from it. You can watch the ICT video on it as well. Probably a better explanation. And I don't use these too much. Just kind of like another PD array that I'm watching, I guess. But yeah. But for tomorrow, I'd be watching this volume imbalance. It looks pretty...
Oh, are you talking about for tomorrow's bias?
Yeah, for tomorrow's bias. I'd be
what do you want to see with it? Like, what does that volume imbalance tell you?
Mainly, okay, it doesn't really tell me too much. It's just when you go to a higher time frame, you want to try to mark out the closest proximity PD arrays, because those are always going to be important to your trading on a lower time frame.
What are you looking for? Because I've been seeing a lot of people say they're bullish for tomorrow, but I don't really know why.
Yeah, I mean, I'm still okay. So this earlier daily volume imbalance, I mentioned this in my expectation and notes. I was monitoring this, and I wanted to see it fill in yesterday. Not yesterday, on Friday. And if you check that paper trade I made, my target was ultimately the high of this volume imbalance. And that's just because it's volume imbalances kind of like draw on liquidity. You know what I'm saying? Like, especially higher time frame volume imbalances, when they're larger, you'll see it like work around them quite a bit. Like up and down, just kind of trying to fill them. So yeah, I wanted to see this one get filled. But then we just barely missed it. So for tomorrow, I think that might be a potential possibility, and we might want to use this daily volume imbalance to get towards it. But I don't want to commit to anything here, because we've just swept this buy side liquidity, and then on Friday, we didn't really I wanted us to mainly stay above the buy side. The fact that we like slammed into it, not the best signature, but I do like how we came out of it pretty fast. So I'm still watching it. We've got this 1 hour inversion fair value gap towards the bottom of it as well.
Yeah, that was the one that I had been looking at, I think.
So
Maybe not. I don't know.
I think so. I think it was.
Oh, and that was the one that was that the one on Friday?
Yeah.
Or Thursday?
Friday.
Yeah, that was the one I used that for my
Yeah, that's solid. I would prefer, another reason I'd prefer this daily volume balance, the smaller one in orange, to hold up, because we've got this immediate rebalance on the 1 hour chart right next to it.
Wait, where's the immediate?
This wick, and then the specific point of immediate rebalance would be right here.
Wait, that's the new type, right? Because I don't see the even wicks.
It doesn't have to be. I mentioned this when I first taught you. It doesn't have to be completely perfect. You have to give it a little bit of room for wiggle, I guess. You know what I'm saying?
Okay, so that one is an immediate rebalance, really?
Yeah, I'd consider this an immediate rebalance. Like, yeah.
So wait, so when you see like a immediate rebalance, do you normally take the fib of the right like, I know this is a bullish scenario, but the right wick?
Yeah, the right. Even if you're bearish, it's I think it's always going to be the right wick.
Yeah. And then what do you want to not see it go below the one deviation?
So the 50% of it. So I used the gone box for this one. I want to see it ideally try to stay above the 50%. It can like sharply trade beneath it. So in this case, I'm bullish. What I'm saying.
Yeah.
I want to see it stay mainly above the 50%. It can trade sharply beneath it, like sweep sell side real quick, and then as long as it's like aggressive about coming back above and not spending too much time beneath it, that's okay. I'll still assume that the immediate rebalance is still valid. And the thing is, though, I can't just use this immediate rebalance as like a high time frame thing that, hey, I don't want to see it trade beneath the immediate rebalance low. Otherwise, I'm going to be bearish, because it can do that. That just means it's not as strong. You know what I'm saying? That means we're more likely in high resistance conditions, I guess.
Yeah.
But
okay.
Yeah. And
all right. Well, appreciate the study session. It was a little bit more confusing today, but I think it's just because you taught a lot of new shit. So.
Yeah, that was my bad.
That's all good. If you could, I don't know where you could, or how you could potentially post that, but I might give it a rewatch. Just I low-key kind of dazed out and a little bit in the middle. I'm not gonna lie. So,
You're cool. You're cool. I'll also, if I have time before one of these sessions as well, like I'll try to prepare some like specific talking points or like notes that I want to get out, you know what I'm saying?
Yeah.
But yeah, I'll catch you later, bro. I've been recording this thing, so I'll try to find a way to upload that.
Alright, man.
Yeah. Later, bro.
Later, bro.